Hong Kong stands as a beacon of economic dynamism. It is renowned as a global financial hub. Its skyline reflects its prosperity. But beneath this economic prowess lies a crucial monetary policy, the pegging of the Hong Kong dollar to the US dollar. This system, in place for over 4 decades, has been instrumental in shaping Hong Kong's economic journey. It has provided stability, it has fostered trade, and it has attracted foreign investment. This essay delves into the intricacies of Hong Kong's currency peg. We will explore its historical context, we will examine its mechanics, and we will analyze its benefits and challenges. Finally, we will consider its future prospects in a rapidly changing world. Understanding Hong Kong's currency peg is crucial. It provides valuable insights into the factors that drive one of the world's most important economies. This essay aims to provide a clear and engaging exploration of this complex yet fascinating subject. To understand the rationale behind Hong Kong's currency peg, we must rewind to the early 1980s. Hong Kong faced economic uncertainties. The Sino-British negotiations regarding Hong Kong's future were causing volatility. The Hong Kong dollar was depreciating rapidly. This sparked capital flight and eroded public confidence in the local currency. In response to this crisis, the Hong Kong government took decisive action. On October 17, 1983, it introduced the linked exchange rate system. This system pegged the Hong Kong dollar to the US dollar at a rate of 7.8 Hong Kong dollars to 1 US dollar. This decisive move marked a turning point in Hong Kong's economic history. The decision to peg to the US dollar was strategic. The US dollar was a stable and widely traded currency. This move instilled confidence in Hong Kong's financial system. It effectively arrested the decline of the Hong Kong dollar and stabilized the economy. The linked exchange rate system is the bedrock of Hong Kong's monetary policy. It has been a fundamental aspect of the region's financial stability since its inception in 1983. This system is designed to ensure that the Hong Kong dollar remains stable and predictable, which is crucial for a city that thrives on international trade and finance. It operates on a simple yet effective principle, maintaining the Hong Kong dollar within a narrow band against the US dollar. This means that the value of the Hong Kong dollar is closely tied to the value of the US dollar, providing a level of predictability and stability that is highly valued by businesses and investors alike. This band is currently set at 7.75 to 7.85 Hong Kong dollars per US dollar. This narrow range ensures that the Hong Kong dollar does not fluctuate wildly, which could otherwise lead to economic instability and uncertainty. The task of maintaining this peg falls upon the Hong Kong Monetary Authority, or HKMA. The HKMA is the central banking institution of Hong Kong, and it plays a critical role in ensuring the stability of the region's financial system. The HKMA acts as a currency board. This means that it is responsible for managing the exchange rate and ensuring that the Hong Kong dollar remains within the specified band. The currency board system is a highly disciplined approach to monetary policy, requiring the HKMA to maintain sufficient reserves of US dollars to back the Hong Kong dollar. It intervenes in the foreign exchange market to keep the exchange rate within the preset band. This involves buying and selling currencies as needed to maintain the peg. The HKMA's interventions are designed to be predictable and transparent, which helps to build confidence in the system. If the Hong Kong dollar weakens and approaches the lower end of the band, the HKMA buys Hong Kong dollars using its US dollar reserves. This action increases the demand for the Hong Kong dollar, helping to strengthen its value and keep it within the desired range. Conversely, if the Hong Kong dollar strengthens towards the upper end, the HKMA sells Hong Kong dollars and buys US dollars. This increases the supply of Hong Kong dollars in the market, which helps to weaken its value and bring it back within the target range. This mechanism ensures that the Hong Kong dollar remains stable against the US dollar. The stability of the Hong Kong dollar is a key factor in the region's economic success, as it provides a predictable environment for businesses and investors. This stability is a cornerstone of Hong Kong's economic success. It allows businesses to plan for the future with confidence, knowing that the value of the currency will remain stable. This predictability is particularly important for a city like Hong Kong, which is heavily reliant on international trade and investment. It provides businesses and investors with the certainty they need to operate and invest with confidence. The linked exchange rate system has been a key factor in Hong Kong's rise as a global financial center, and it continues to play a vital role in the region's economic stability and success. Section 4. Pillars of an economic powerhouse. Benefits of the US dollar peg. The decision to peg the Hong Kong dollar to the US dollar has yielded numerous benefits for Hong Kong's economy. This strategic move has been a cornerstone in shaping Hong Kong's financial landscape. It has contributed to its remarkable growth and its position as a global financial powerhouse. The peg has allowed Hong Kong to maintain a competitive edge in the global market, ensuring that it remains a key player in international finance. Let us delve into some of the key advantages. These benefits span across various sectors, impacting everything from local businesses to international trade relations. Firstly, the peg has provided Hong Kong with much-needed economic stability. This stability is crucial for fostering a healthy economic environment where businesses can thrive without the fear of sudden currency fluctuations. The stability of the Hong Kong dollar has fostered a predictable business environment. This predictability is essential for businesses to plan their operations, investments, and growth strategies effectively. This predictability has been instrumental in attracting foreign investment. Investors are more likely to commit their resources to an economy where they can anticipate future conditions with a reasonable degree of certainty. It has also promoted long-term economic planning. Businesses and government bodies alike can devise long-term strategies, knowing that the currency will remain stable. Secondly, the peg has facilitated international trade. By linking the Hong Kong dollar to the US dollar, Hong Kong has minimized the risks associated with currency exchange, making it easier for businesses to engage in cross-border transactions. Hong Kong is a highly open economy. Its openness to trade and investment has been a significant factor in its economic success. It relies heavily on trade. The peg has ensured that businesses can operate smoothly without the added burden of fluctuating exchange rates. The peg has reduced exchange rate risks for businesses engaged in international transactions. This reduction in risk has made Hong Kong an attractive destination for companies looking to establish a presence in Asia. This has made Hong Kong an even more attractive hub for trade and commerce. The city's strategic location and stable currency make it an ideal gateway for businesses looking to enter the Asian market. Thirdly, the peg has bolstered investor confidence. Investors from around the world view Hong Kong as a safe and stable place to invest their capital. The stability of the Hong Kong dollar has given investors confidence in the long-term prospects of the Hong Kong economy. This confidence is reflected in the steady flow of investments into the region. This confidence has translated into sustained foreign direct investment, further fueling Hong Kong's economic engine. The continuous inflow of foreign capital has been instrumental in driving growth and development in various sectors of the economy. In conclusion, the decision to peg the Hong Kong dollar to the US dollar has been a strategic move that has brought numerous benefits to the region. From economic stability to increased investor confidence, the peg has played a crucial role in shaping Hong Kong's economic success. As Hong Kong continues to grow and evolve, the benefits of the US dollar peg will likely remain a key factor in its ongoing prosperity. The peg has not only anchored the economy but has also provided a solid foundation for future growth and development. The US dollar peg stands as a testament to Hong Kong's strategic foresight and commitment to maintaining its status as a global financial powerhouse. Section 5. Navigating the constraints, challenges, and criticisms of the peg. While the US dollar peg has undoubtedly been beneficial for Hong Kong, it is not without its challenges and criticisms. The peg has provided a stable exchange rate which has been crucial for trade and investment. However, this stability comes at a cost. Some argue that it limits Hong Kong's monetary policy independence. The Hong Kong Monetary Authority, HKMA, is constrained in its ability to respond to local economic conditions. Others point to the economic divergences between the US and Hong Kong as a source of potential vulnerability. The two economies are fundamentally different in size, structure, and economic cycles. One of the main criticisms leveled against the peg is that it restricts the HKMA's ability to set interest rates independently. This means that Hong Kong's interest rates are effectively dictated by the US Federal Reserve. Since the Hong Kong dollar is linked to the US dollar, the HKMA must follow the US Federal Reserve's lead on interest rate movements. This can be particularly challenging during periods of economic divergence. This can be problematic if Hong Kong's economic cycle is out of sync with that of the US. For example, if the US economy is booming while Hong Kong is facing a downturn, the HKMA's hands are tied. For instance, if the US raises interest rates to combat inflation, the HKMA must follow suit. This can lead to higher borrowing costs in Hong Kong, which may not be ideal during an economic slowdown. However, if Hong Kong is experiencing an economic slowdown, raising interest rates could further dampen growth. This lack of flexibility can exacerbate economic challenges. This lack of monetary policy flexibility is a trade-off that Hong Kong has accepted in exchange for currency stability. The peg has provided a predictable environment for businesses and investors, but it also means that Hong Kong must align its monetary policy with that of the US. Another challenge stems from the economic divergences between the US and Hong Kong. The US economy is large, diversified, and less reliant on external trade compared to Hong Kong. The US is a large and diversified economy. It has a broad industrial base and a large domestic market, which provides a buffer against external shocks. Hong Kong, on the other hand, is a small and open economy heavily reliant on trade and finance. Its economic fortunes are closely tied to global economic conditions and external demand. This means that Hong Kong is more vulnerable to external shocks. Events such as global financial crises, trade disruptions, or changes in international interest rates can have a significant impact on its economy. It can be disproportionately affected by changes in the US economy. When the US experiences economic turbulence, the ripple effects are often felt strongly in Hong Kong, given the peg and the close economic ties. Despite these challenges, the peg has been a cornerstone of Hong Kong's economic policy. It has provided a stable and predictable exchange rate, which has been crucial for maintaining investor confidence and facilitating international trade. The HKMA continues to navigate these challenges, balancing the need for stability with the limitations imposed by the peg. The debate over the peg's future remains a critical issue for policymakers and economists alike. As Hong Kong moves forward, the ongoing assessment of the peg's benefits and drawbacks will be essential in shaping its economic strategy. The peg's role in Hong Kong's financial system is a testament to the complexities of managing a small, open economy in a globalized world.